Yo, let's go. Bum, bum, bum. G'day, mate. Huh? Where'd you go? Hey. Hey, good morning. What's going on? I guess maybe I should go back. What works best for us? Go back. Anyways, hey, good morning. Comment allez-vous? Jumbo? Ohio? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, so please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yeah, I got 8 hours sleep, so I'm having troubles. So anyways, good to see you. Oh, yeah. Yeah, thank you, Ray. So, what do you want to do? How about some yen pairs, some dollar pairs, some gold oil, cut loose, get out, moveon.com. Yeah. Actually, my exams today, the way that it works, if I have an online exam, is they give you a 24-hour window to start and finish. So I can actually start today, which gives me, I like to kind of warm up and do a problem set or something before I get going. But it's a really cool system because they record you as you're taking the exam, and it has artificial intelligence. So if you get up and walk away, if someone else walks into the screen, if you're doing something that you're not supposed to be doing, even your eyes, it's tracking your eyes. If it does something that it thinks, like let's say it thinks you're cheating, it's saving the recording, obviously, but it red flags the professor and everything, and they can come in and watch you take the exam through your own camera and stuff like that. And I'd be out of Harvard if I cheated in a millisecond. So it's a really cool system, which is great because as a distance student, in the past you'd have to get a proctor, and that's a real pain. You got to drive somewhere and go to an environment you're not used to and use tools that you're not used to and pay money, and that sucks. So anyways, so I'm going to take it this morning. Cool. So let's make some peeps. By the way, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. And if you are new to these webinars, I am here to teach you how to trade via technical analysis, fundamental analysis, trader psychology. Boy, it's weird today. The lighting's weird. And so the best thing for you to do is, 1, ask questions and get involved. 2, treat all your other fellow traders with respect. And 3, visit TradersWay.com, open up a demo account at least, and give TradersWay an opportunity to earn your loyalty and respect. And when you're ready to trade real money, perhaps because of the lessons I've given you, you'll choose TradersWay as your broker. So look at it this way. They're making the investment. These guys are making the investment, right, up front to help you become a success first. And then once you feel like you're ready, then you become a real money client. That's a great business model. So thank you, TradersWay, for investing into our community. All right. So what? What's going on? Let's just kind of pick up where we left off. And one of the things we did when we left off was, oh, not that, was this idea that we were down here, right? We were down, wait, hang on, let me update these. Hourly chart, let's do this one, hourly. Hourly. I thought one of these was lower. Hang on. Why don't I remember this one properly? Huh. All right. Well, I apologize for that. I was going to say I thought we talked about counter trend. Yen. I thought it was some yens. Maybe it wasn't the yens. Well, then let's stick with the one we got. For some reason, I thought 2 or 3 of these were at the green zone here. I just remember it wrong, I guess. Maybe they were Swissy pairs. Yeah, we did though, didn't we? I remember it differently. I thought 2 or 3 out of the 4 were in a situation like this, but apparently they're not. So anyways, the one caveat to this that should be mentioned, because we got a lot going on here. There's some price action and stuff. So we know that's a sell zone. Okay, just like this was a sell zone. So that should be a sell zone. Also, this area here, this predicts one more move down, doesn't it? Now remember, it doesn't have to because we're talking about targets. But it is what it is. I mean, so the way you look at it, let's do this fatty. The way you should look at it is like this. Okay? And there's still a reasonable chance for that. Okay? Now, it doesn't have to, but there's still a reasonable chance. And the reason for it, again, I just remember, I'm not suggesting like hope. I'm suggesting that how you say in English, that this predicts this move here. That's all. That's all. But no one would laugh at you if you were too conservative to take the trade. Okay. USD yen, yeah, for you, Pharaoh. Typically I say no, but can't say no to my Pharaoh. Off with his head! Is that Pharaoh or Queen of Hearts? I'm not sure. Okay, so anyways, interesting play there. I'll remind you what we talked about on Thursday. I said we had this all lined up, okay? And I said if you need to start planning it on Thursday, because if you don't see it on Thursday, you're not going to plan it. You're not going to take it on Monday, right? Right? And what I was saying here is, if you're going to sell it, don't sell it low, sell it high. Next week, it could be Friday, it could be Monday, and there you go. You see what I mean? So the money made, guys, the money to be made, the genius inside you is doing this on a Thursday. By this, I mean planning Monday's trade. Planning Monday's trade on Thursday. That's the money. That's the money maker right there. Just remind yourself every day, if you don't know what you're doing today, you've already lost. You are not an expert. You're not in control. You're not even an analyst, for crying out loud. Not even an analyst. And I say that because analysts make $60,000 a year. Traders make $600,000 a year. And maybe even more. And I'm talking about at banks. So like I live in Atlanta. Atlanta's not a big city. It's not a big player. It's sort of the capital of the South. But there's a bank here, which is a regional bank. It's it's probably the biggest bank in this region of the United States. But like no self-discerning New York banker would work for the bank because it's not a New York bank. It's not an international bank. It's not even a national bank. So anyways, there's this bank in Atlanta. A buddy of mine went through a divorce, and and so he got a cell phone and suddenly was dating. So anyways, he dated this woman that worked at this bank. Okay, fine. Anyways, she made over $1 million a year. Like, what? Yeah, $1 million a year working at a regional bank in Atlanta. And of course, every woman will know if she's making $1 million, there's some idiot with half the intelligence doing the exact same job making 1.3 million. Is she right? So they're like, dude, seriously? And you get vacation time? And you get a retirement package? Yeah. So anyways, right? Who makes 60K? Someone that costs the bank money. They want to keep your salary low. Who makes 1.6 M at a bank? Somebody that brings the money in. Is that right, Mo? Mo's got the glasses. Rocking the glasses. So I have a new pair of glasses. My wife's like, don't wear those. They don't look good on you. They're just, you look bad. I'm like, oh my God, that's really hurtful. What if I said something like that to you? And she said, well, you did. I'm like, when? She said, well, when I got glasses like 8 years ago, you said I looked like a Chinese political prisoner. And I'm like, I did? Well, touche. You married me? What's wrong with you, girl? So anyways, yeah, let's move on. So yeah, I just want to make sure you understand what I said. So if you're just sitting here going, I wonder what we're going to do today, right? Versus, I don't know, you got to be a money maker, which means you got to be 2 days ahead of everybody else. Yeah. Isn't that funny? I'm like, okay, well, have at it. Okay, this is an area of caution for Euro. Okay, what do we call this? Remember I freaked out some yesterday's called a double top or something? I'm like, no, that's not a double top. This is a double top. Okay, that's a double top. You've got a nice, pre-existing trend going. And then, it's really a triple top, which is even better. And then the lower low. And then the money, right? The money? Where's the money? Show me the money. Remember talking about this? Price action. Gorgeous! Right? Right? Boop, 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 boop. Boop, 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 boop. Boop, 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 boop. But now why the double bottom? Because that's what you would expect here. Isn't that funny? You remember when you traded and you didn't know things like this? Like reversal patterns the markets just seem to reverse at random areas. Remember that? You're like, I don't know why it totally reversed. I have no idea. Sold the 21. It just didn't work. I don't know. Maybe it's me. Maybe I need a new guru. Maybe I need a new indicator. What is the CCI? Maybe CCI will do it for me. Remember all these things? Well, Max says it's so easy when I do it. Well, I understand price action. So it's not me. You need to brush up on your price action. So I would do price action all day, every day for a year until I was a master. Remember, I'm ridiculous. I had a guy in my cohort. He's like, you don't need to do that. Right? He was talking about a project, and I was just, I overdid it. He's like, you don't need to do that. I'm like, I know, I'm ridiculous that way. Okay? So do it for a year. Absolutely dominate. If you're in sports, do you want to like compete or do you want to dominate? When you're like a professional fighter, do you want to go in and compete or do you want to destroy? What kind of mental mindset does like a mixed martial artist have? Or how about even in war? Like, when you're going to show up and do a good competition? Oh, that was a really good fight, guys. Let's do it again tomorrow. You know, no, you want to kill. Because the faster you kill your enemy, the less bullets that are coming your way. And then, of course, in war, the more devastating your attack, the sooner they quit, right? So, like, you need to be a dominator and a destroyer of markets. This isn't like, let's go in and do our best, everyone. No. Because then what? Then maybe after a while you become break even. So I would do this like, I would absolutely totally become a master of price action. And then I'd become a master of something else. And then I'd become a master of something else. Like, if you're going to do this for the next 10 or 15 years, you might as well get good at it. Is that actually a thing? Dominate, intimidate, and destroy? I think I'd do it the other way. Intimidate, dominate, and destroy. But yeah, it's sort of like fire for effect. You know, if one bomb will do, hit them with like 5 bombs because everyone else runs away and then the war's over. Right? You want to end the war as soon as possible, right? Otherwise, it just drags on and more people die, costs more money, and more people are, whatever. You want to end the war on the first day, don't you? So anyways, what the best study material for price action? What is the best study material for price action? You could go to fxbootcamp.com and take the price action video training course. That would be a good start. Being a little facetious, though. So anyways, get in on this, guys. Get in on this. And so this is a mix. This is price action, but this is pivot points. So the interesting thing is when you shorted here because of price action, you knew this was your target. You knew that's the high probability, right, of reversal. And you knew it 14 days ago. Oh my gourd. So when you sold this, you said because of CPP, S2 is your out. Oh snap. And of course, there's the whole counter trend thing, right? So if you had taken the swing trading course, you can see that too. I mean, you can't see it, you can smell it. You can smell it here. You're like, oh, in this situation, oh, yeah. But do you trade a counter trend here? No. Do you trade a counter trend here? Yes. Okay. And then if it goes up here, OMG, we're on our way there. So there's a lot going on here. And if you don't know, it's going to seem random. You know what I mean? So when your financial advisor says, well, you know, you can't really predict the market, so therefore you're going to need diversification. And then when it drops 30 or 40%, I won't do anything and you won't do anything and we'll ride it out. And then you, first of all, you slap the guy in the face or her. And then you stand up and then you grab their coffee cup and throw coffee on them. Then grab your bags of money and walk out the door. Because if they can't do it, it's because they don't understand. And then you say, hey, by the way, I just need to ask you, Mr. Financial Advisor, what educational background do you have? Well, I have a sports marketing degree from the Eastern what would I call it? Like the Eastern College of West Virginia? I don't know. I don't know. Just like you're like, oh my God, I was going to pay you 2% of my net worth. Yeah. Well, it's knowledge is all I'm saying, guys. It's knowledge. Now, someone's going to need you. So this is another thing I keep trying to share with you. People need you because the vast majority of the people in the business of helping people with their finances don't know anything about finance. And in this case, when it comes to global markets and multiple asset classes like, foreign currencies, metals, energy complex, stock indices, all these different things, they need you. They need you. They need you. Like society needs you. They are waiting. They need you to help them. Okay? You have a moral obligation and duty to society. I don't know, and I'm not joking. Okay? I'm not joking. So, prepare yourself for greatness because the world needs a hero. It might as well be you. Okay. Let's take a look at gold. Gold! So we had gold trapped. Check that out. Okay, now what? Is it too late? Well, it's too late for the past. Beep. Okay, it's too late for the past. Okay, but I had this trap for you. See here and here. You can even see, but anyways. So let's call it that. It actually goes further back, but anyways, let's call it that. So how should you treat it now? Well, let's thread the needle, so to speak. Lower low. Okay. This is the top, this is the bottom. Often after a change, you're going to need the top, not the bottom. Okay. Okay. And now use the bottom. You see, the first one's the top. The second one's the bottom. That's very common after a change in trend. Okay. And now what? Now we got to change colors because we're range bound. So now you go neutral, right? We talked about this, right? You go neutral in a scenario like this. And what do you wait for? A breakout, okay? So one trade plan, remember, we don't know if it's going to work. It doesn't matter. It's just a plan. So the next part would be something like that. It'd probably be off of this. So let's do it like that. Okay, and then probably even the hair, and then maybe a reversal. Why the reversal? June. It's not really a reversal, just back in the range. But remember, I already did all of this for you several days ago and last week. Don't say things like that here, okay? Don't say like you heard gold's going to do something. Don't even say it here. Just don't even say it. It's not you. It's like I don't want to hear it on TV either. Like I just don't even type it out. It's not worth the time. All right. And gold. How about WTI? Whoop, whoop, whoop. WTI. Still in a range, huh? Okay. Stay neutral. And remember yesterday, it's going to move sideways forever and ever 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 forever will stay in a range until it breaks. And you see why I make these rules? By the way, why do I say silly things like that year after year after year? I've been saying that, I swear to you, probably close to the entire 15 years I've been coaching. Okay? Why do I say things like that? The whole forever, never, 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 never. Well, it's an anchor. And anchoring is a technique from neuro-linguistic programming. So I'm doing this so that you can actually, because, and you may also wonder, like I sing a lot. Sometimes it's just because I'm thinking, but often I'm planting, right? So let me change it now. How many people, when they're trading by themselves, can actually hear my voice? Not just what I would say, but actually there's an audible. You actually can hear it inside your mind. How many people would say that that's true? Hopefully not all the time. And hopefully it's not like kill, kill, kill. Nobody? Oh, Cedric, right on. Jason. Alejandro, yeah. And that, my friend, is neuro-linguistic programming. Oh, Joe, that's creepy. What am I wearing, Joe, when you see me with your mind? Hmm? Yeah? So it's interesting, right? Yeah. Kill, kill, kill. Kill, kill, kill. Yeah. Well, right? So there's a point to it. Okay? Now, here's the next step for you. You ready for this? You might not be ready for this. You can do this for yourself. Not just the trading. You can train yourself. So, it's very interesting, and I've mentioned this a few times over the years, but when I trade by myself, do you know what I hear in my mind? You just wait, Pharaoh. We'll get there. Only for you, Pharaoh. Hey, baby doll. What do I hear when I'm trading by myself? Can't be you. I've never heard you speak. Except Daniel. I think when I'm trading by myself, what would Wayne do? And that is true. Would I advise or would I teach what I'm about to do? Like if I'm about to sell, would I Would I teach this? Okay. Would I teach what I'm about to do? Is this what I would recommend? Are these part of my rules of engagement? Okay. You will get there. You can be your better self, and it will always be a struggle. Good people can do evil things, and evil people are evil. But they have the choice to be good. You understand? That's, you know, like, I don't know, bunny rabbit, right? A bunny and rabbit doesn't have that in them. A chimpanzee does. Okay? Do you talk to yourself like, it's the major reason why I do these webinars, besides helping you and watching you grow as a trader? It's why I do webinars. I'm actually teaching myself. And you will know that if you ever coach and mentor someone someday. Okay? But you better know how to coach and mentor. That's a whole different skill. Okay? Anyone can trade. But I think, again, and then I'll do the thing is, you have to have a long-term point of view. And you have to have a long-term point of view by planning, right? You have to have a plan. And then you have to have experience of trading the plan, good and bad. And then document what you're doing so that you can share what you have learned. So it takes a long time to even get that kind of experience, right? Okay. But just because you're experienced doesn't make you a good, like how many people have ever taken a job and they put some dude in charge and the dude was a moron. He couldn't teach crap, right? So anyways, there's more to it than that. Simon, that's only an incentive in the beginning. Like, I don't think that way anymore. I don't think like, oh my God, I hope I don't lose money. Why would I lose money? Right? So things become different later on. That's how it is in the beginning. All right, let's go, Pharaoh. Got to keep the Pharaoh happy. Right. Looks like a counter trend. Now, there's lots going on. First of all, I don't typically trade this pair because I either trade the dollar or I trade the yen, so I'd never trade the two. Okay, that's the first thing. Second thing is this predicts that, so that is done. So I think I showed you, if not on this pair, on a similar setup right? I believe I showed you something like you kill the monthlies now, which is a risk, and your weekly trades become sort of the guide, but I don't like that. Okay, you see what I mean? At that point, I don't like being out here on the ice floes by myself. There's polar bears out there. It's dangerous. So I'm flying, or it's like going hunting through the forest without a compass, without a GPS, and without a map. You're like, I feel like I'm vulnerable here. Okay, so all of that needs to be stated because it's going to impact how I think. You can see we're playing off of a monthly. So let me mark these things. Okay, we're playing off a monthly. 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 So these monthlies are in control. There's some logic here, but we're not playing off a weekly. We're not really playing off a weekly. It's not as perfect and precise. And yet we're saying, let's not use monthlies. Let's only use weeklies. So all of that says risk to me. Because you might say it's similar to whatever other pair I covered earlier, and we had some beautiful price action, and then it reversed at exactly where I wanted it to reverse. Okay? Well, because I saw that, right, these types of things, it lends confidence. it's hard to maintain that confidence in a scenario like this. All right, but let's try it anyways. So let me give it a click. Let's probably go farther out. I mean, that's a 4 hour. Like, where is it that we're going? I'm not that interested or jazzed on this. So let's mark kind of an, oops. Let's mark kind of an area like there, and I'll take the real body as well. Okay, so there's resistance there. There's something sort of in here. There's something sort of in there, but that ain't gonna happen today. All right, so let's drop into an hour. And yeah, if you were gonna sell it, you'd have to get going soon. Oops. Okay. So maybe there's a way to get on this. I don't know what it's going to give you. Okay. But I can't buy it there. I guess I should be clear there. I can't buy it. So if I wanted to buy it, I'd need it to come down a bit more. And I need to look a little farther left than this view. So let me back out a little bit. Oh, that's, oops. Let me back out a little bit. I mean, I don't know. What would I call support now? What would I, if I were support, I guess there's two zones here. Like maybe there's a loose end there for support, and then there's that. So putting them together, okay. If you're a bear, your plan is something like this, and if you're a bull, your plan is something like that. Okay. And twisted thoughts. Spinning, oh, spinning. Yeah. Okay. All I am, all I'll ever be. I know someday you'll have a beautiful life. Right on, Pharaoh. Cheers. Know you'll be the sun. Oh, look, I already did it all for you guys on a different chart. Oh, well, you're welcome. So we said here, probably reverse, but not right away. So it'll go up, and then it'll come down, and then it'll go up. Oh, cool. Good for me. I love me so much. Thank you, me. Oh, now Beast looks like that's a break, right? All right. That's a break, yo. That is a break, which means the other, if this is going to break, it's going to, if this or others are breaking, they're going to drag everything else down. Okay? So what do we know is logical? Let's do logic first. This predicts this. Okay? This predicts that. Okay, and all of that is done. So now it gets traded like a breakout. So the way to trade a breakout is down, up, and down. I don't like it. I don't like it at all. Right? I don't like it at all. Because it's going to drag everything else. This is too low. This is oversold. It's not that you can't trade it, so don't misinterpret what I'm saying. What I am saying is risk is increase because this is unusual. Okay? The usual, okay, this is what's usual. Somewhere in there. Okay? So usually you're in a scenario where it goes up, it comes down, it comes up, it comes down, right? And then it kind of does this eventually, right? That's normal. That's why we use it. Okay? So it doesn't mean it can't go lower. It just means it's unusual to be this low. So therefore, you are assuming additional risk than normal because this is unusual. Unusual means risk. It's less predictable. Okay? And it's okay to trade down here as long as you know what you're doing, and that is, the rules of engagement. Well, the rules of engagement are kind of the same, but it's the unusualness brings a different level of risk. The WS2, well, if it goes to WS2, what you're thinking there is then an Arctic turtle and it pops back around. I would just say, you know what? I just need to be cautious. Okay? Selling here and selling here and selling here and selling here. All of that's easy, straightforward, everyday kind of work. So what I'm saying is it could do this now, or it could do this now, or it could do this. And, it's just be careful, be cautious. Okay? That's all. You can fight the battles, just don't be confident. Okay? Do the extra level of work. Be sure. Okay? There's 2 bullets in the chamber now. The odds have changed. Okay? So if pound drops and CAD is through and Kiwi is through, then you know what? This euro has a decent probability of dropping through. Okay? So if you went long here, move your stop or maybe take a walk because we're looking at everything else. If we're looking at congruency, right? On the same time frame, no. So like the way you would do things is like, okay, I do my planning here. Okay, so breakout, pull back, breakout, pull back, breakout, right? So let's say on a 4-hour chart, we agree that this support is now acting as resistance, right? So the trading comes in here. Okay. So maybe he traded a double top, maybe he'll trade a lower high. Okay. That's just tactics now, not strategy. Maybe do it here. Okay. Yeah, this was supposed to be a buy if you're a bull. But you see how I tell you, be cautious because we're not supposed to be this low. Okay? When you're not supposed to be down here, this stuff happens. Because if you're trading the double bottom high, we call this a 1, 2, 3 hammock. But not in this world. This is Twilight Zone, right? It's so ridiculously bearish that it's not technical doing this. Okay. But if you're a bull, you would, right? Plan A, plan B. If you're a bear, so you do like, let's do one green. And then do the other one red. Okay, one of them. So, another way to look at this, okay? Trying to find different ways so you can remember. When you're below your monthly pivots, it's not technical. Whatever's causing the market to move, it's not technical, it's fundamental. So don't bet against it. Do you guys remember in my book I call something a moo trade? It has to do with daily pivots. The moo trade says in a breakout above or below the pivots, if it's below, you keep selling. If it's above, you keep buying. Because it's not technical analysis anymore. If it was technical, it would have reversed. So there's something greater than technical analysis. Technical analysis is just technical analysis. It's nothing. Okay? It's nothing. Who cares? There's something fundamental going on either with the yen or the pound. Now, if all yens are below their technical levels, then there's something going on. It's definitely risk off. Okay? Overreaction to a trade war, for example. Okay? So it doesn't mean you have to keep selling here, but down here, don't try so hard to reverse it. Hey, Forex Trend Trader, Night Owl, Forex Trend Trader, Night Owl. Hello, Fernando. Floralexperience.com. Thank you for subscribing. Good Deep Sharma, thank you for subscribing. Okay. So say it this way. Right? Just think of it that way. Like this is bigger than your pivots. This is something fundamental. You don't want to bet against it. You don't have to trade with it, but you should not bet against it. Well, again, I'm in a normal world. So the question is, do I set up alerts and stuff like that? No, I mean, I trade all the time, so I'm already there. Like, why would I need an alert? I'm in front of my charts. Okay. Like, I'm always looking at my charts. So I'm just saying, though, after this, you got a problem. Okay. And technical analysis will tell you this should go up. And it's not, so I got to back off because something ain't right. Being followed by the same sucker's headlights. What was that, Ghetto Boys? I make big money. I drive big cars. Everybody knows me. It's like I'm a movie star, but late at night. Something ain't right. Being followed by the same sucker's headlights. Yeah. That's it. Ghetto Boys, I think. So anyways, that's typical. It ain't doing typical. I can keep trading. I shouldn't counter trend, and I should be cautious. Yeah, it might be Brexit, but I think this is bigger than that. I think it's yen. I think it's yen. And the reason I think it's yen, because if you look at the yens, they're all doing it. J-Dub, right? I got it, right, J-Dub? That's a good one. This year, Halloween for upon a weekend. Me and Ghetto Boys are trick-or-treating. Robbing little kids for bag and Dada Omega Biana rag. Yeah. 1993, maybe? Not sure. Swiss it! Oh, yeah, of course, it can be Brexit and yen, absolutely. But there's something bigger than that. So this has nothing to do with pound. This has everything to do with Swiss franc. That's congruency. And the thing that creates the Swiss franc move created the yen move. And that's why I teach you guys fundamental analysis. My mind's playing tricks on me. So if you don't know fundamentals, you don't know jack. I'm pretty good at technicals, Wayne, but I don't know anything about fundamentals. Well, you don't know jack. Because all of this, by the time you recognize it technically, it already happened. So you already lost, right? This is all, and especially when you see all Swissies down, all yens down, that's fundamental, my friend. Yeah, well, Jason, if I'm not in it, it's because, or if I don't have a plan for it, it's because I'm already in it. Oh, you right? Never matter the matter, corrupt like a senator. Yeah. That is fundamentals that you're looking at, guys, not technicals. Okay. All right. So let's take a look at the risk off. Okay. By the way, when you're missing things like this, you're not setting your trades up properly. And by the way, surely all this risk is exaggerated. Well, it doesn't matter now, does it, though, right, Alex? So I've long since left that alone. I think because the market doesn't know as much as we do, it overreacts. Okay? It must be very scary for a lot of people because they don't know. So I'm used to the market now surprising me when it overreacts. Or that it's very, very late with something obviously approaching. Sort of like the Titanic. And the captain and his first mate are standing at the front and they're like, yeah, pretty sure that is an iceberg. And the guy says, well, should we go back to the wheelhouse and I don't know, what should we do? And he's like, well, that's a very good point. We probably should do something, should we? Right? And the market is like that. The captain and the first mate standing out on the front of the boat, not even in the wheelhouse, watching the iceberg come closer and debating whether they should do something or not. And then when it hits, freak out, right? Then they move quickly, usually jumping in the lifeboats before the pregnant women, right? So the market seems to be really, 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 really late, and then wham, the market moves. And it's more so that way now than 15 years ago. So anyways, what I'm trying to say is you may have heard from me that you need to bring consistency to the market because the market will never be consistent. And this is where I got the idea for the training wheels. Okay? Because if you have a plan, if you have your year planned out, then you can go through a bad 3 weeks where you really don't get a lot of trade setups, and it won't change anything. Do you understand? That's another whole thing that's holding you back. Being so small, time frame wise, mentally for you, is holding you back. But if you had a plan for this year, next year, what happens over the next 3 weeks is really irrelevant on the long run. Okay? So the training wheels idea is you tell me what your bias is, and then we'll start planning. Well, that's consistent right then and there. If you're a bull, you'll only have bullish trade plans. If the market is bearish, you won't get a lot of trades. If the market's bullish, you'll get a lot of trades, and you'll make a lot of money. because that's definitional. Do you understand? Like the definition. If the market's bullish and you're a bull, you will be very profitable. So why the hell are you selling in a bullish market? But people get all of this backwards. They buy in falling market and they sell in rising markets, and they're like, dude, this is not working for me. So what we need to do is give you control by having you only do one thing. And when the market agrees, you make a lot of money. And when the market doesn't agree with you, you probably don't get a lot of trades. And if you do get some trades, they might actually be profitable, but they might be small losses. So you either don't get the trade, which you don't lose money, but some of them will be small winners and some of them will be small losers. They offset each other and nothing ever happened. So now you just get to the making money, right? So it's like if you were a bull here and you, right? You would have, your plan A was here and well, this never happened, right? You just never got it up. That did, I mean, that would scare the heck out of you. So if you're a bull, you had one shot and it only lasted 12 hours and it didn't work out and maybe you lost a little bit of money on that, okay? Done. Not a lot of other opportunities. Actually, you know what? You might have tried in here. And again, you lost a little bit of money. So all month, you took 2 small trades and both lost. Why? Because you're a bad trader? No. You see what I mean? Not because you're a bad trader. Because the market went from bullish to bearish. So you had 2 small losers. Don't worry about it. It's nothing. Okay? Now, what if you're a bear? That's a weekly sell. This is a monthly sell zone. So, done. Down, 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 right? Up, up, sell here off the roll reversal. Down, 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 down. You would have tried here. Your stop would have been up there. You would have been fine, right? Down, 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 down. This is a sell, front run. Down, 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 down. You're nailing it. Now you should be growing ultra conservative. So the difference here, if you know how to trade, you either crushed it and you made boatloads of money, or you had 2 small losses. Okay? Yeah, you would think, right, Raymond? Like, dude, if your trade doesn't make 15 pips, I mean, 15 pips is, I mean, it's really silly. But I do it because I'm trying to teach a sort of a common rule. Also, lots of amateur traders, they like to break even a lot. +1, +1, +1. And again, that's really silly. So that's where I'm trying to get you guys, where when the market agrees with your analysis, you make lots of money. And when the market doesn't agree with your analysis, you lose a little bit, or maybe nothing at all. And over the course of a year, if your analysis is correct, and your analysis should be correct, why wouldn't it be? You're going to be very profitable at the end of the year. You understand? Alex, it's just negotiation. That's fine. They're doing what they need to do. Okay? This is what governments do. So it's like, well, the soybean farmer in Iowa is going to lose money this year because China is not going to buy his soybeans. Okay. So the government could come in, fill the gap, buy the stupid soybeans, and I don't know, give them to cattle farmers for free. I don't know. Send them to Africa. Okay? And then tell the farmer, hey, buddy, next year, don't plant soybeans. Done. So, yeah, it sucks for like a whole 6 months. But the trade deals that are being negotiated will last generations. So get over it. It only sucks for the soybean farmer. My point is, and I've said this in the past, economists are so confused why the United States can't create inflation. But it's not confusion. They shouldn't be confused. China makes things for cheap. In fact, they make it artificially cheap. And we buy all of it from them. So there's no inflation because Chinese prices are artificially low. And we buy as much as we can from them. So therefore, there's no inflation here. Cool. Well, if you remove the artificial low prices from China, prices will go up and you will have inflation. It's so simple. Yet there's PhDs and Nobel laureates working on this problem. I'm like, we'll make China sell at normal prices. Done. Alex, eventually there's a Nash equilibrium. Yes. Okay, so I don't know. Should we do game theory quickly? I think I can do this one quickly. Let's go Khan Academy here. So you have what? The United States and you have China. And you have tariffs or free trade. Tariffs or free trade. Okay. And now you got to put some payoffs in here. We'll go negative 50, 0, 0, 0, 0, and we'll go 200, 200. So I think the way that this game works out is if the U.S. does tariffs, right? If the U.S. does tariffs, China does tariffs. The U.S. looks at it. If China does tariffs, U.S. does tariffs. Because let's reverse engineer it again. If the United States thinks China is going to tariff, then we'll tariff. And if whatever. Eventually, it's going to go here, is what I'm trying to get at. Because they're both better off. But, right? And they have to play a repeated game. An infinitely repeated game. Infinitely repeated game. They have to play forever. But they also have to collude. So, right now we're stuck in here as we negotiate our collusion. Is what I'm trying to get at. Okay? And what they're really creating is a monopoly, an oligopoly, so to speak, where the two major firms are going to collude and create one giant monopoly. And so we have to negotiate the terms first, tariff, 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 which just makes this more interesting. We're really just raising the payoffs to let's say now 300, 300. And this is getting worse and worse from 50 to negative 150 or from negative 50 to negative 150, right? So the pain is getting bigger, the benefits are getting bigger, and it all leads to a better Nash equilibrium as long as we can collude. And by collusion, I mean trade agreement. Okay. So the war itself, because it's a war of attrition, will lead to a stalemate, right? We know that. And do you guys remember the SOM? Is it SOM? How do you spell SOM? I guess it's SOM, right? WW1. Sorry, I mix war history with economic history. but I'm fascinated by both. In World War I, you had the Somme in France, where you had the trenches, right? Germany on one side, everyone else on the other. They tried to get through it with technology, so they invented flamethrowers to scare the heck out of the troops so they would run. And then the other side got flamethrowers. So then the one side brought in tanks, scare the bejesus out of the troops so they run away. Well, then the other side got tanks. So then one side got gas, scare the bejesus out of everyone. And then the other side got gas. What do we call this type of game? Tit for tat. Okay? Tit for tat. Okay? And it leads to two different possibilities. Right? In game theory, we can call this tit for tat strategy both lose, right? And it gets worse and worse. So they're both losing 50 whatever units of util, and then they're losing 150 units as a new thing comes along, and then they're losing, and then a new technology comes along, and now they're dropping hand grenades out of airplanes on each other, and then they're putting machine guns on zeppelins, and it just gets worse and worse and worse. And eventually it leads to a stalemate. They either all die, right? In war, it's not who's right, but who's left that wins. Yeah, this is a zero sum. So the other stalemate is peace. And the interesting thing is humans know this intuitively. Did you know it got to a point where the troops would organize between the two enemies without communicating when to shell each other? So the English had an unwritten agreement, nonverbal unwritten agreement. At a certain time, they would wait for all the Germans to go in their underground bunkers, and then the British would shell. And then at the right time, at a pre-agreed time, all the English would go in their underground bunkers and the Germans would shell. They found their own Nash equilibrium. It's really, 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 really interesting. It didn't come from the Germans. It didn't come from the officers. It came from the troops in the trenches, found their own Nash equilibrium. Without having a written contract, without even having a verbal contract, they just found that that was the best for each other. And then, of course, if you broke that unwritten, unverbal agreement, then they would just shell the hell out of you 10 times over, and then you'd go back to equilibrium. And so the other equilibrium eventually, besides death, there's a stalemate equilibrium where both are worse off. And that happens in games, right? And then the other stalemate had to do with changing strategies to a max min, but ultimately peace will be made in the same way that these trade negotiations, tit for tat, tit for tat, tit for tat, right? They're peeing on each other's shoes, then they're peeing on each other's, I don't know, shins, and they're both losing. And then suddenly they'll come up with a deal. The pain is too great. They'll negotiate, and they'll have a long-term agreement, and we'll be stuck in national equilibrium, but through collusion, right? And we'll have a trade agreement, and we'll go back to being filthy, stinking rich again. That's all. And the interesting thing is, guys, you can do the math on all of this, which is also very interesting. Big banks and institutions and hedge funds, yeah, and there's like principal agent problems with that and asymmetric information problems with that, but it will still lead eventually. Yeah, I can see that, Mike. All right, so anyways, let's go on to a different Swissy. Okay, much different outcome here, right? So you got to watch Aussie. So we know Aussie's weaker than Euro. We know that factually now. And so what do you want to do? Well, here's the interesting thing. We knew at the beginning of the month that this is where bears wanted to sell. And we knew at the beginning of the month this is where bulls would want to buy. So are bulls going to buy it here? Well, there's a confluence of bears getting out and bulls getting in. So it really has to do with the overall market. Okay. If I was a bull, I'd be paying attention to this quite closely. Okay. And you might want to look at something like this. Okay. Bears, you're just going to sell it up here. Don't worry about it. Okay. Which means you might have to do it Thursday or Friday. What? Yeah, Thursday or Friday. What does that have to do with right now, Wayne? Get me in a trade right now, Wayne. Tell me what to do right now. Get me in a trade. No, sorry, dude. I'm talking Thursday or Friday. Okay? And by the way, if you don't come around Wednesday or Thursday to plan out your Thursday or Friday trade, you're not going to do it, and whatever. Doesn't matter. You're not listening. Okay? Yeah, right, Chris? Got to plan ahead for show, right? So I can just imagine this just being a beautiful place, right? We need to watch this area in here and this area in here. So we got this whole nice little move. Okay. The one worry is if we've already missed it and it's a Tuesday trade. Okay. That's the part I don't know. So it's too late to do it now. It's 4 hours ago, right? But if you get another chance up there, it may be worth it. If you get another chance up here, it might be worth it. Or we've already missed it, but that's how it happens. Yeah, Pissy, let's go back. We did Pissy yesterday. Like, we did all of these yesterday, right? So, yeah, that's all. Now what? Now, of course, I wish this would go up. Not this. I prefer a weak Swiss franc. Okay. I prefer that. So we'll see. This one I don't like, and you've heard me bitch and complain about it, so I don't know what more to add. This doesn't give me much useful information, except this is the target. Okay? And right? So we have a double cluster here. This says stop selling on the weekly basis. This says stop selling on a monthly basis. But we know we have an unusual risk off scenario. So this has the capability of going lower. But how do I handle that situation? This says get out. This says get out. So do I get out? So that's what I mean earlier when I said, look, you can keep selling to here, but it's additional risk that's unusual. You understand? So do what you need to do, make your decisions, but adjust your expectations and adjust your risk analysis. Okay? Okay? Well, you already missed that. There's already been the pullback. But even like price action wise, I mean, where is the next move, right? See, the moving averages have given you lots of trade opportunities, but even the price action on a 4 hour anyways is pretty thin. This is really moving fundamentally, not technically, as I've been trying to describe, right? So like, where's the wonderful technical analysis for selling here? Okay, down, 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 up, up, sell. So let's try to fit something into here. Okay, down, 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 up, up, right? Sell, right? Down, 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 down. Maybe here, sell. Down, 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 down. Here, sell. And then what? Down, 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 down. Across here, sell. Down, down. So right. So you see this? Now we're down here. And where's the sell? Here? And then what? Why is it consolidating and braiding? Right? Go ahead and answer that. Why is it consolidating and breaking? Why isn't it giving us this? Like a nice opportunity. Like, why isn't there a nice entry here? And why are we not getting pullbacks? And why is it braiding and consolidating? Why, guys? Is it something predictable? Yes, if you want to download my chart templates, it's the link to the free download is in the video description below. Because this is where bears are supposed to get out. We knew that, and they're doing it. And it's why they stretched out, because it was one last hurrah to hit the target, and then everyone got out. The thing is, nobody's buying it. So what happens now? I don't know. I don't know. That's the issue. That's why risk goes up. I don't know what to do now. Everyone did their job. They did what they were supposed to do. Okay? Someone did the front run here. Okay? That's the monthly sell. And they're like, oh, that's the weekly sell too. Great. Okay? And it drops down here. And check this out. Here's your Thursday, Friday front run. It seems pretty close to that pivot. Boom. And now they're up. Now they're laughing and eating ice cream at the same time while holding a red balloon. And they're like, this is awesome! Because nothing's better than giggling, eating an ice cream cone, and holding a red balloon in one hand. That is so much happiness. Oh, well, walking your puppy. Yeah. Oh, look at the cute little puppy. Yeah. So I got to go warm up. I got an examination. I have to, right? I have to turn my brain and cough. Got it? Got to get my brain going. That was me cranking it, huh? Yeah, getting ready for the big exam. So I hope you have a wonderful day. I hope you learned something today. I hope you're nailing some trades today. I hope you're learning when to be aggressive and when to be conservative. I hope you're learning to think ahead. I hope you're... Yeah, the twirly hat. I don't even have a twirly hat down here. I usually have some sort of hat. So I wish you the best, man. I want you to succeed. Make sure you like and subscribe. Bring a friend, huh? Bring a friend. Leave a comment. Wish me good luck on my exam. Would you do that? This is important. If I do well this week in exams, I graduate Harvard on the dean, with honors on the dean's list of academic excellence, which means if I do well, I will graduate one of the smartest people at Harvard. But I'm on the razor's edge. I'm telling you, if my GPA drops by 0.01, I'm out. I'm out. I am no longer one of the smartest people at Harvard. I'm just another idiot at Harvard. Just another Wall Street asshole. So I need to do well. So would appreciate your, your good karma. That would be great. Don't say it here. Write it in the comments. Write it in the comments. Write it in the comments. Yeah. Peace on earth. Peace on earth. May the pips be with you. May our profits be above average. Thank you so much for being on my team. And I will see you tomorrow. Thank you, Traders Way. Blump, 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 blump. And I should also remind you to subscribe and all that kind of stuff. And there's only 4,000 videos. One of them is how to trade the Mexican peso and why it works. And it doesn't have to do with technical analysis. It has to do with money flow. You can watch that or any of the other 4,000 videos on YouTube associated with my work. Love you, babe. Got to jump. It was real.